With the growing popularity of stock trading apps, it seems like more people than ever are interested in investing. I first started investing around 5 years ago in 2016, and while I am not a professional by any means, I've still learned a thing or two along the way, and I hope that this video, if anything, inspires you to learn more about it and educate yourself on this topic because there's so much free information out there. So let's get into the things I wish I knew before I started investing. So the first thing I wish I knew before I started investing is that you do not need a financial advisor to start investing. So this is me when I was around 21, when I first got started with investing, and I was so daunted by the whole thing, and I felt convinced by that industry that I needed a professional to do it for me. You know, I didn't know enough about it. There was no way I could do that well. I was just nervous I would make a bad investment because I didn't know what I was doing. When in reality, just about every stock I'm holding now, if I had bought it 5 years ago, it would be worth significantly more. So I did at that time end up working with a financial advisor that a friend recommended, but you know, looking back, I don't think I really needed to. I think I probably would have been better off just investing in an index fund that tracks the entire stock market. And this isn't something I just randomly came up with. I got to credit Graham Stephan and the other stock channels I watch with this. After I went on his podcast, I realized, wait, actually, yeah, I don't need a financial advisor. And in fact, investing in an index fund probably would do better. I mean, this study showed that 92% of the time, financial advisors can't beat an index fund that tracks the S&P 500. 92%. I mean, that's most of the time. So after I went on the podcast, I went home and I checked exactly how much was my financial advisor making returns for me versus if I had just invested in the S&P 500. And here's what I found. My financial advisor's return for the last year is 19.27%. And then they take a percent fee. So I'm really only getting 18%, which is actually still amazing. Any other year, I would expect to get probably about 8%, but it's not as amazing when we compare it to the S&P 500. And the S&P 500, the return for the last year is 54%. So double, basically. And while these numbers are unusually high, it confirmed to me exactly what that study had said, that investing in an index fund almost always beats a financial advisor. And these days, you can easily do it with the click of a few buttons on a stock trading app. So this isn't to say all financial advisors are bad, but it's just not something that you should feel like you necessarily need. If you do feel better about someone managing your money, I get that, but now knowing the statistics, I personally feel like I don't need it. If I want to invest some money in a rather safe way, I just invest in an index fund. So I would always get confused on how do you actually buy the S&P 500. So the one that I buy is the Vanguard S&P 500 ETF. The ticker symbol is VOO, V-O-O. By buying this stock or other index funds, you're basically buying a bundle of different companies, so it's generally safer than just buying one individual company. It's no secret what's in this index fund. You can look it up online. As you can see here, it's mostly Apple, Microsoft, Amazon, companies that we've all heard of. And while this index fund is mostly tech companies, you also get exposure to healthcare, real estate, energy, and more. So really the easiest way is to use a brokerage app, and one that I've really been loving is called Public. What I love about Public is they actually have an amazing interface. It's so easy to use. This is not something I can say for every stock brokerage app I've used. Some of them are very confusing, but I'm sure you can see here, this is just a screen recording of the app. I think it really speaks for itself. It makes it really easy to see what's going on. It's cool because it has a social feature, so you can actually follow me on Public and see what I'm buying, so I can post and make a little comment. I really think that's a cool feature. Another great thing about Public is they stopped participating in the practice of payment for order flow, which I don't know if any of these other brokerage apps can say that they did. And I'm gonna put my money where my mouth is right now and transfer my stock portfolio from the app that I was using over to Public. So let's do it. And you guys, they did not ask me to do this or anything like that. That wasn't required for the video. I just personally want to because I really like this app. All right, and now I'm going to submit my transfer request. That was actually so easy. So you guys can get a free stock when you open an account on Public. So if you want to do that, I'll have the link down below. Thank you to Public for sponsoring. And on to the next thing I wish I knew. The next thing I wish I knew before investing was how capital gains taxes work. So back in the beginning of the quarantine, I noticed a number of stocks consistently dipping, then going back up a couple weeks later. So I played around with swing trading, which is where you hold a stock for a short amount of time. So I would even buy the same stock repeatedly and make money off of it 3 different times. And while I did make money on it, I don't think it was really the smartest way to invest. I had no idea that you pay way more in taxes if you hold a stock and make gains on it in less than a year versus a year. So if you hold a stock for less than a year and then sell it, this is what you're going to pay in taxes on the gains you make. As you can see, it's up to 37% if you make over $518,000, but even the 24% range is pretty high. If you hold a stock for over a year, however, like literally a year in one day, you're going to be paying much less in taxes. I mean, 20% from 37%, that's a 17% difference, and that can really add up if you're investing a lot. So let's say I make $100,000 a year and I made $10,000 investing in the stock market. If I held those stocks for under a year, I would pay 24% in taxes, versus if I held them for just a year in one day, I would pay 15% in taxes. A 9% difference. Once I learned that, I took a look at some of the moves I made, and I did realize it's almost always better to just invest for the long term than to go crazy buying and selling. You know, you're almost always gonna make more money if you just hold. I remember one stock specifically I did this with was Boeing. I bought it for $92 and sold it a month later for $141. So before taxes, I made $49, but because of my tax bracket and the fact that I held it short term, I paid 32% taxes on that. Joke's on me, because if I had held that for a full year, not only had the stock gone up significantly more, but I would have been taxed half of what I was at the short-term rate. So clearly we can see I would have kept a lot more. And this is not to mention that if you're trading short-term, it's just more stressful and time-consuming, and it's just like not really worth it in my opinion. So just something to think about. The next thing I wish I knew is that you can actually see what billionaires are investing in, exactly how much they bought, how much they sold online. It's called a Form 13F filing, and basically any company or individual that holds over $100 million has to file this, and you can just see it online. So not only is it interesting, but it can give you an idea of stocks to further research that you might want to invest in if you're picking individual stocks. So we can see here, you can just find this online for free. This is Berkshire Hathaway, which is Warren Buffett's company. And we can see that at the end of this last year, the last Form 13F filing, he sold 6% of Apple, bought 150% of Verizon, sold 58% of his shares of Wells Fargo, and on and on and on. It's not like you should necessarily copy this exactly, because we are seeing it a little bit delayed. However, you can still see the inputted share price, so that is good to know. And I just think this is a cool way to get ideas of stocks to further research if you are looking at investing in some individual stocks. And keep in mind, even Warren Buffett has losing stocks sometimes, so you shouldn't necessarily completely copy this, but I think it's good to at least get some ideas of stocks to research further, and it's just kind of interesting to see. And the last thing I wish I knew was that if everybody's talking about it, you're probably too late. Personally, I feel like if the news is talking about something, you're a little late. You see this with GameStop, with Tesla. By the time most people know about it, it's so hyped up, the stock has gotten so expensive, it's not even really worth it anymore. And probably a few years ago, I didn't really understand this, and I feel like if I saw a stock was already doing well, that meant it would continue that way. But now these days, I'm usually looking for stocks that are down quite a bit, but are companies that I really believe in or use. It seems like a lot of the time the news is just trying to get clicks, but you really have no idea if the people talking have some hidden agenda or if they're even buying this stock themselves. The thing about the news is I think sometimes people see it as kind of like an authority on this topic. They've got these experts on, and some of them may be experts, but Like I said, you don't really know their agenda. No one can really predict the future. No one really ever knows what's gonna happen. And I feel like when I was younger, I would think, well, it's the news, they're experts, they know what they're talking about, but like nobody really knows for sure what's going to happen. So just take what you see in the news with a grain of salt sometimes. I honestly have learned a lot more about investing just from YouTubers probably than anything else. And I know that might sound kind of crazy, but I like that it's more transparent and people are actually talking about what they're really investing in. I think the news maybe sometimes is more respected because it's the news, but they're usually just talking about what's hyped up in the moment and not really teaching you anything about actual investing. I also feel like YouTubers are just quicker to everything and you tend to find things before it's so overhyped. But you guys probably already know that. At the end of the day though, I think it's important to do more research. Never go off of just one suggestion without knowing anything about a company. I personally don't do that. I mean, I don't think I even did that 5 years ago though. I feel like that's just common sense. So those are a few things I wish I knew before I started investing. It's better to just start, get some skin in the game and start learning about it. Even if it's just $10, it will get you thinking about it and learning. And if you hold long enough, you really could pick almost anything and you're gonna be okay. And just don't invest what you're not okay with losing. I personally never trade with margin or anything like that. I hope that you guys enjoyed this video. I know it's kind of a hard subject to broach because I didn't want to be too basic, but also I didn't want to get too complex on it. So I tried to stay a little bit in the middle. Hope that you guys enjoyed. And again, I will have public down below, so you guys should go follow me on there. And I will see you in my next video. Bye.